Welcome back, everybody. With NVIDIA continuing its massive run and just about every AI stock continuing to go up, there's more opinions than ever talking about how the AI bubble is about to burst. NVIDIA is the new Cisco, everything's overhyped, and so in this video, we're going to talk about the comparison of AI to the internet craze. We're going to break down the AI ecosystem and where companies fit, and then talk about how the risk to investors is different for each one. So let's go ahead and get started. And I thought there was a really good interview on CNBC that actually helped me think through this problem a little bit, and so I wanted to share it with you here.
AI stocks do keep rising, but our next guest says that he's waiting to get in on the hype. Joining us right now is Mitchell Green. He is founding partner at Lead Edge Capital and an investor in Ant, Alibaba, ByteDance, and Uber, among many others. And Mitchell, thanks for coming in today.
Thanks so much for having me in.
So you think these valuations are far too high at this point?
I think people are back to 20 and 21 crazy land, and this might be a little 99, 2000 world. A really famous early stage investor told me recently, when I asked him about AI, what are your thoughts? He said, in 1997 or 1998, you could build a website. It would cost you $50 million, and you'd have to go to Sun Microsystems to buy chips. Fast forward today, you take $25 and go to GoDaddy with your credit card. They believe the same sort of thing is going to happen. AI will revolutionize the world. It's going to take, it's going to completely change industries, create new jobs, probably, radically disrupt entry-level white-collar jobs. However, it's going to take a lot longer than people think.
Now, I will say, I wasn't sure about this interview at first. It starts out a little weak, but it definitely gets better. And his point about Sun Microsystems and GoDaddy, I thought was a really interesting one about how the winners of the internet really weren't who you expected at the beginning, because there was a lot of transformation and things that used to require a lot of money and knowledge became easier and more democratized because of the power of the internet. But I do think saying that we're back in like 2020 or 2021 or even 1999 is a bit off. And even though that's the sentiment that a lot of people are talking about right now. But I feel like it's missing a couple caveats that we're going to get into. But Becky Quick hits on one of them in her next question.
Let me push back just a little on the comparison to 1999, because I remember that too. The difference at that point, though, was none of those companies were making any profits. They had revenue that was coming in. Nobody had any profits. This time around, you can look at a lot of companies that are making some pretty huge profits that justify the earnings. NVIDIA, you can look at.
NVIDIA.
Okay, what about what Amazon's able to do with this? What about what Microsoft's able to do with this? And what about the companies that I'm talking to when they automatically put AI in and they can cut their expenses drastically immediately out of the box?
What's really interesting, and I think causing this weird dynamic in the markets, is a huge amount of the value right now is flowing to NVIDIA and the giant data center guys.
Yeah.
Those guys are printing money off this. And you have all these other companies, whether it's XAI, Elon Musk, one of the most famous entrepreneurs ever, but raising a startup at $6 billion, Anthropic, OpenAI, none of these companies are making money.
And so this is one way where I think what's happening today is somewhat different than 1999 or even 2021. Because while you have some companies that are rising up on crazy valuations, you have others that are performing very well and actually making money. Now, obviously, the big tech firms are making money in their core business and then spending that money on CapEx related to AI. And then obviously you have NVIDIA, which is at a high relative price to earnings ratio, but people have been comparing it to Cisco, which was at a 200 price to earnings and an 80 price to cash flow in the year 2000. Whereas NVIDIA today is at a PE of 67 and a price to cash flow of about 60. And if you consider projected earnings or cash flow, it's actually at about 44 for both. And more importantly, those numbers have actually improved over the past 18 months, not gotten worse. And that's one of the big differences between NVIDIA now and Cisco in 1999. Because as Cisco stock rose, the price to earnings also rose because the stock price was outpacing the business. Whereas in NVIDIA's case, as the stock has been rising, the price to earnings has actually been dropping because the business results are actually outpacing the stock price. So is it expensive? Of course, but it's not quite bubble territory. The issue, though, is that that's just NVIDIA. That's one of the companies he said was actually making money while others aren't. And this was a really great point to me and something I've been thinking about a lot. Because when we're thinking about AI and what it means to actually invest in it, there needs to be a distinction in terms of what part of the ecosystem you're talking about. So let's take a look at where some things are at. And so here's a chart that I just created real quick. It's not meant to be an exhaustive list, so if I'm missing someone, don't be surprised. And I know there's some additional overlap in some of these groups, but in general, these are where the companies are at. And so the first thing you notice here is that pretty much all of the companies involved in this ecosystem, all the way up to the infrastructure providers, are some of the best performing stocks in the market right now, especially those here in the bottom three, because they're providing the quote-unquote shovels for the gold rush. Chip designers design chips, and the demand and price for their chips is sky high. So the chip makers' business demand is also sky high, and their capacity is maxed out. So then the chip component and service suppliers who have the supplies and services to help make the chips are booming as well. So basically every company in this stack has done extremely well over the past year. Well, except for Intel, because Intel is Intel, and I've said it before, but they're a turnaround story that's just a different investment than like in NVIDIA or even in AMD, at least in my opinion. But then if we go up to the AI infrastructure providers, those are the ones who are spending a lot of capex to grow their AI capabilities in order to sell to other companies. So those are enterprise services that they're trying to build, because the OpenAIs and Anthropics of the world are using Microsoft and Amazon's cloud infrastructure to build their AI-related software platforms. So again, those infrastructure providers are spending a lot, but they also have a clear path to revenue with AI tools and a platform that's ready for other businesses to use. But then if we go up to the AI software platform group, this is where I think he was talking about all the companies who aren't making money, because they're building up AI related tools, ChatGPT, enterprise focused AI tools, whatever those are. And here's where I think a lot of the question comes in terms of what benefit they're actually going to provide and if it's going to actually be profitable or not. All that to me is still TBD. But that's also where you hear a lot of the hype and ideas that aren't totally baked yet. And he talks about that here.
But everybody talks about how, like all these companies, we look at all these smaller AI companies, and a lot of vertical application software related to them.
I'm thinking like customer service.
Yeah, it's like customer service or communication software. And if you actually start to dig in and look at the gross retention data, so it's like how many customers are coming back every day, you see a lot of revenue growth, but the gross retention is not very good. It would look nothing like a Snowflake or a Datadog or a Viva, which are world-class SaaS companies with really high gross retention, or Microsoft's data center business, which nobody ever leaves, or Amazon, AWS, which implies to us that lots of customers are trying this stuff, but a lot of it is probably more hype than actual product right now.
So you have heard from a lot of these companies, and every single time you're not impressed at this point, or?
Having met a bunch of them as potential vendors, we have been pretty underwhelmed with what we've seen so far. Could be another great example. Our LP base is really unique, and I think you guys know we have a lot of wealthy individuals that are investors with us. We host events. We have like dinners. So we'll have 200 people come to dinner in New York. We'll have 60 people come to dinner in Austin. And we have seated dinners. We know how much these people have invested. We know what their hobbies are. We have 10 years of data for historical dinners. So I said to my team, why don't we build software to use AI to automatically build seating charts? So it was like, it'd be a pretty easy thing to do. Do you think it exists yet? No, of course not.
Really?
We just think, and we see it in the retention data of these companies. If the software was as good as everybody said it was, the retention would be really, really high.
And so this goes back to the fact that the people and businesses on the software layer are still trying to figure this out. Like, what can they create with AI to help other businesses be successful? And right now we just don't know. But that's only at that software layer. In all the other places of the stack, we know what the business model is, because the AI infrastructure providers are building platforms to be the cloud provider of choice for any business out there, because they're combining their cloud infrastructure now with AI tools, with the idea being that whoever wins in the AI tool race will have a chance of greater market share when it comes to cloud. So Microsoft, Amazon, and Google are all fighting for that. And if you believe that their cloud business is important, which I think everyone does, then you should understand why they're spending so much in CapEx for AI infrastructure to marry with it. And the reality is that doesn't even include any other parts of their business that may benefit from those tools themselves. And you might say, well, we don't know if any of these AI tools or infrastructure is actually going to provide an ROI to their actual clients or not. And you're right, we don't know. But the majority of that risk still lives up here in the AI software platform level. And it's undefined because it's still too early to know. But then for all of these levels below, it's all about what the demand is for the AI chips and software that those infrastructure providers need. Right now it's sky high and they're taking up most of the demand, but there are obviously other customers outside of big tech because you have governments, you have smaller businesses that are all getting started in this area as well. But the risk for these levels is that the overall demand for AI components will slow down, because if it does, then all of these levels are impacted. NVIDIA and other chip designers would be impacted, chip makers and chip suppliers would obviously all be impacted, but as of right now, that's not even close to being the case. Demand is far ahead of supply in this area, and that's just the truth. So the question we have to ask ourselves as investors is this growth story still intact, and for how long? Which is the same thing I said when I bought NVIDIA back in March. That was the main question that you have to answer for yourself, and obviously the longer this goes on, the more skeptical investors are going to be. And Becky touches on that right here.
Okay, so last year, companies, and I'm talking public companies now, were applauded when they talked about how much they were investing and spending on AI. It feels like that has shifted a little bit this year, and there's a little more pushback from investors that they want to know how you kind of rein that in a little more. Just like we went through a few years ago when investors pushed back on Meta and other companies that were investing tons and tons in the metaverse.
I think that's right. Look, in the CapEx numbers that people I think were throwing out in some of these last earnings calls over the last couple of quarters has just been like the amount of money that Facebook and Amazon, Meta, and NVIDIA are spending. It's these numbers are gigantic.
Now, obviously, we know why they're spending so much because we touched on it earlier in the video. These companies have a clear path to revenue, so they're investing in seeing where it goes. And part of the reason here is we don't know how big this can actually be or the impact it can have, at least not in a tangible way. But they have a lot of money to spend, and they view it as critical to keeping and gaining market share in their cloud business at the very least. Okay, so what does this all mean? The main thing that investors are missing as it relates to AI is many are assuming that all these companies are the same, and that they're all in bubble territory from a price perspective, and that they're all going to have the same risk in terms of slowing revenues or just general interest. And that's just simply not true, because depending on where they are in the ecosystem and their position in that area, their overall outlook and risks are going to be different. To me, the software AI businesses, at least right now, are a little bit of a crapshoot. There's a bunch of people experimenting, trying to figure out what services they can provide and how they can make money both on the consumer side as well as enterprise. So when people say the best internet companies didn't come till later on, I think we're going to see something similar with AI in this group of software providers. So as an investor, any investment in one of those companies to me would be the riskiest out of the whole stack because they're not really making money yet and you're banking on them becoming a winner. So the risk is going to be very high. Now, another approach potentially is a great existing company that totally transforms how they do business in a positive way because of AI. I could totally see a Caterpillar or even a McDonald's or companies like that where they have a strong core business and then they use AI to really augment what they do to improve efficiencies, obviously reduce risk, or even venture into new areas because of the leverage it provides. So as an investor, the risk here is that you don't really know how much AI is going to be able to help these businesses probably for a while. So you're likely investing in them because you like the current business, and any AI efficiencies that they gain in the future would just be a nice bonus. But for now, at least, the companies with good profit stories in AI are the ones providing the tools and infrastructure to allow everyone else to experiment and find their way. And that's where the bulk of the money is gone. And how long that's going to continue is something that nobody really knows. But in my opinion, we're closer to the beginning of what AI can be than we are to the end. As crazy as that sounds, even with all the capex that's going to be spent and already been spent. And just to be clear, I'm not telling you to go out there and buy NVIDIA like I did. Like, that decision that I made carried a lot of risk with it. And up to now, I've been rewarded and my thesis is playing out the way that I expected, but that could all change very quickly. I'm just saying that we tend to try to put limits on what things can be because they challenge the norm of what we're used to. When people saw the price of NVIDIA do a 5x in about 18 months, and they saw me start buying in March in the 800s, they were like, oh, you're an idiot, that's FOMO. But my thought process was pretty simple and actually based in fundamentals. NVIDIA has the best product, serving the richest customers in the most exciting industry, with a dynamic leader who has vision and a rock-solid balance sheet with no debt. While they were expensive in terms of price ratios compared to other companies, and the stock had done a 5x in terms of price, the business growth has outpaced the stock price, which is why their price ratios have actually gone down over the last 18 months, which is pretty crazy to think about. And look, honestly, at some point, NVIDIA's multiples are going to compress. The cyclical nature of their business is going to come back. And realistically, how much can they keep growing at a $2.8 trillion market cap from here? I don't really know. But I just decided that I wasn't going to artificially limit something that we can't really define as long as the core business is strong and the growth story is still intact. And for me anyway, the answer to that question has been yes, because of where NVIDIA sits in the ecosystem. But this is part of what makes investing hard, because I do agree that there's a lot of hype out there. And you can tell anytime a company reports earnings and doesn't report great earnings and a great outlook, they're just getting hammered in the market right now, with Salesforce being the most recent one. But that's why I always talk about having a strategy and having criteria that are important to you as an investor, so that you have things that you're monitoring for each company to know when your story is still intact or not. Because every decision we make in the market is going to be a risk, and stock prices are going to go up and down, sometimes irrationally. But as long as you're clear about what you're investing in and why, you can make rational decisions that fit your own plan, and then just evaluate them over time to see if they pan out or not, even if other people assume you just did it because of FOMO. So what do you guys think about the AI ecosystem? Are there specific companies or areas you're most interested in? Let me know down in the comments below. Now, if you want to watch my original analysis on NVIDIA when I added it to my portfolio, click on this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.